The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Let me just put this before I forget. This is the webinar coming up tomorrow night, working on it, and things are starting to plan out very nicely with positions we're looking at, what we want to do, preparing for this next phase. Called Basil Chapman Presents a webinar for the opening call subscribers. Anything goes. The stock market's key phase. One of the reasons is the key phase it's not an ending phase, it's a key phase in that certain parameters have to be hit, and then I think we go into overdrive. Until then, it's a compartmentalized market, a rotational correction as each move up goes. So you get a smack of Walgreens on the downside, pulling the Dow back while something else moves the Dow higher. Boeing catches a bit and goes from the 361 low just recently to 10% higher with all the bad news going on. That's the market we're in. Wednesday, April the 3rd, 2019, 5 o'clock to 6:30 p.m. Eastern Time. It'll be archived on your page, sponsored by TFNN.com. Check it out. I'll be talking about, really, for me, this is one of the most important phases, not necessarily market timing or anything like that, but it's a phase. It's a historic phase, a phase that really has to do with the relationship of parallel eras, like the 1920s, like the 1890s, like the 1987 period. This is things like 2000. This is really key. I'm showing you a chart here. I was asked about would I see would I look at O'Reilly Automotive, and I did mention that the Orly bird catches the worm. So this first request goes right in there to the putter. And we've got 393.67 up 2.13, breaking out to a new recovery high in the daily, a leg C, a leg D, all-time high in the weekly, and a leg F. But this could turn into an instant restart in the monthly chart. It's going to be very important because the whole automotive section, whether it is automobiles, whether it is problem child Tesla, whether it is the use of Uber and Lyft, etc., impacting the buying of vehicles a lot. And I'll be talking about this in my webinar. I'll be talking about a 300 mile per hour car. I mean, how it represents where we are in this age. So, Orly, this is a cup formation. MACD is very strong. Not as strong as it was when it went to peak G at 394.42 the middle of March, pulls back to the 50-period moving average exact, around about 361.54 on the 12th of March. It's now 30 points higher. MACD is good. Stochastics at 91%, very nice. I think it's going to go a bit higher. And the weekly is good. It's not a great, funny enough, it's at all-time highs, but it's really not a great weekly technical picture. But that maybe is the positive because it's going to allow it to go much higher. Or we're really close to a D and then we pull back to the 375 level. You're watching this closely. But the question was, what is the notation? If you went from, let me do this. Remember, this is the one that I said, a very good example of the Chapman wave stalk leg formation. Weekly chart had a huge leg to the upside. Then it went to a distinctive, not a rectangle, but an absolutely distinctive oval formation, the body. And then you got the neck. And the neck broke out above 363.20. It went to that peak G/C high of 394.42. And then it pulled back. And the rule of thumb in the Chapman wave stalk leg formation is that when the neck is formed, when it starts the beak, remember, a stalk doesn't have a head, it has the whole head beak is one unit. So when it turns around like this, the rule of thumb is always that the beak will go to just inside or into or below the body, and each one has a particular methodology behind it. At 363.20, that neck high of 394.42, when it pulled back, it should have gone to both the 9 and the 14 period moving averages, and it should go right to, it's got to touch 363.20. The low was 361.54. It did it exactly, beautifully, and now it's in another move to the upside because the MACD is still good. 9 and 14 period moving averages are good. Stochastic's okay at 75%. On balance, volume is rallying. So if it did everything you wanted, so at this particular point, if you are long or you're waiting to, if you're looking to short, you have to wait a little while. I want to get more of a picture of what I'm looking at in the, I forgot to put this in. This is the Chapman wave inside wedge target repellent line. It went, oh, what an absolute perfect line that was. I never anticipated it would be so good, but it is exact to the day it made. This is the bar, the end of the bar of the left side, right side price time match to the low that was made at 361.54 on the 12th of March. And we went in exactly the same time period. The cup shape from the top lip to the bottom trough, starting to the right side, is exactly the same number of bars. Isn't that interesting? Most of the time you will find cup and arch formations, unless it's a crash formation, most of the time it's just a very orderly move up and an orderly move down, or a more orderly move down and a more orderly move up. It's funny about this. It's rare that you get the break, the real break to the downside or the upside with a crash or a rocket ship to the upside or a crash to the downside. So here it is. So all-time high. So all it is looking good still. If you are in it, all I'm going to say is raise. If you're getting nervous, if you're not nervous at all, just don't do anything else. Stay in your positions. Maybe have a stop. Give it 375, 20 points just for the moment until it starts to pull back and see where it pulls back from. I think it'll still make a leg D. Number one. Number two is, if you're getting a little nervous because your position has now gotten a little bigger than you expected, then what I'm going to say to you is why you could have a trading stop. But what I would do, since it's already snuck above the 394.42 high by going to 395.05 today, why don't you not take the 3 or so points that I would say to you use as a trading stop? Why don't you just, I mean, I don't see it going much higher, maybe 395 to 396, so that's 3 points up. I would say you could even take something off right now if you're already getting a little nervous, that's all. You get a little nervous. I wouldn't even, you know what, 393.78, hold it through as much as you can this week, that portion that you would take off and have a trading. What was the low today? 390.54. There you are. There's those 3 points. Give it a 1.5 point stop and let it ride until you're stopped out. You might gain another point, a point and a half, but I'm suspecting that it's really close to some kind of a top. All right, let me just do this right here as we're going into the break. We're going to go to ORLY in my Chapman Wave automated notation, resistance 404 in the weekly. It's right there in the daily, bumping into resistance. I'll be right back. The Dow's down 92, S&P's down 2. Basil Chapman, Tiger Technicians Hour.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, we're back, and the Dow's now down 100, and the S&P is just down a little bit, 280. There's a divergence, of course, WBA. Let me just show you WBA. WBA is Walgreen, Boots. And of course, what happens, it's so inevitable. WBA was put into the Dow, and it was looking quite good, right? You remember, it was sometime, let me just have a look here. When was Walgreen put into the Dow? And the answer is June 19, 2018. June 19. June 19. I mean, they do this every time. Not every time, but just about every time. June of 19, Walgreen was trading at right there. It made a low in June of 2008. Oh, okay, well, that's not bad. It had made a low. Let me just put it into perspective. It had gone from back in 2009, somewhere around the teens, and it had soared to double top July of 2015 in the 97 area, pulled back to the low. And, oh, okay, that's not bad. They chose it when it was on its way down. They usually choose it on the way up. 59, it was at 59. It ran to 86. Hey, 59 since cool. It's 60 to 16. So that, whoa. That's pretty good. So it runs very sharply up halfway to its all-time high, and then it gives it back, and today it's down 7.5 at 55.92. So that is impacting the Dow, and the 200-period moving average of 52.95, that's kind of a better hold that, otherwise it's got a real problem, let me tell you. So this is a drag on the Dow. When it finally comes back, it'll help the Dow, but it isn't going to do that in a year. All right, so the issue now is you've got the Dow being dragged down, percentage-wise much bigger because of WBA. You did have Boeing moving up a little bit earlier, but now it's back to 391, but 391 from the 361, 30.10% higher. That has been a benefit. So now we're going to talk about the dollar, because the dollar is at 97.52. It needs to clear the double top 97.37 level for the third time it needs to clear. It has had a high. This is the high as we're talking right now. Remember, I wanted to show this because for me, this is a clearer picture of the potential for a head and shoulders pattern. I happen to think that there's not going to be a head and shoulders at all, but I was just talking about if you want to see patterns where you've got the left side pulls back, it makes the right side that's higher, it makes a rally that's higher. So you've got the left shoulder, then the head, and then it pulls back again, and then it goes higher, and it goes back to where it was for that shoulder, 97.37. I said that this is closer to what I'd be looking at as a head and shoulders, but it's not that for me. For me, it is a cup with a handle, and that handle goes to the 97.71 level, and now it started something new. In fact, this is one of the most unusual patterns. I'm going to draw something in right now, and one of the reasons why I've liked the dollar for so long is because it represents the U.S. economy. So to me, that is like the yen back in the 1980s when it was so strong, and Japanese were starting to send everything they could here for sale, and their stuff got better and better and better, and until 1980. 1990, sorry, 1990 when it made that major top. The Nikkei, what was that, almost 37,000. So this is different. Here I'm looking at the dollar and I'm saying, I love the pattern. I love this cupping formation with higher highs and higher lows, except we've got to break 97.71. I like the fact that it's just about to test the recovery high, 0.01, and the MACD is within fractions. It has just gone a penny. It's gone plus by a penny, but it's only Tuesday, early Tuesday. So we've got the whole week to go. Maybe by the end of the week, it hasn't crossed positive, but I like it. I like the way the stochastic is coming back. It's at 71%. I love the way that the fast moving average, little green line, is accelerating high. I'm going to be talking about this tomorrow night. I'm talking about the meaning of what's going on right now with the dollar, with the way the currencies, this compartmentalization. Look at this. The dollar is at a new recovery high, and gold is trading at it's up 1, and it is not really a reverse pattern, but it has made, instead of that cup formation we were looking at, this has made an arch formation from that peak D. Remember, D is where we're always looking for a potential reversal, D or E. You got the E in the weekly, E in the daily before, and now D again. A quick move to D underneath the previous high is never a good sign in the Chapman wave methodology. So this is something I'm going to be talking about, the relationship of the compartmentalization, because at one point gold was trading more as a fear factor because the XLF was doing so badly, and basically we're looking at Brexit and other things around the world, and yet if you look at the XLF, it's holding quite nicely here. So I think that I'm going to talk about this tomorrow night as well. This is the reason why we have some of the positions that we've already got. I'm hoping these are longer term positions. I don't want them to be short term positions, but I still have to have stops in. I'm not prepared to sit with a 15 or 20% correction on a stock and just sort of looking at it and saying, oh, is it going to go to 20%? Is it going to go to minus 30%? I'd rather come back again. So far, the XLF, the financial US, the S&P Select Financial Spider Fund, it's doing okay. Down 5 cents right here, 26.30. Some of the stocks have done quite well. I'll be talking about a Goldman Sachs. What's going to happen? Why it's lagging so badly? When do I think it'll start to really become a leader, as I would expect in that whole broker-dealer area? This is all of these things I'm talking about tomorrow night. I'm putting into the context of right here. Let me show you, to be discussed. Socioeconomic parallels to 1920s. I still think it's absolutely imperative that I stick to the theme. The Fed, that's yields, real estate, skyscrapers, and huge projects. I mean, here in Boston, it's the first time ever we've seen this number of skyscrapers being planned, already completed and being planned. It was the first time we've seen since the 1950s, 60s, where they want to build over the turnpike. I never think that's a great idea, but anyway, that's what they're going to do. I love architecture, so if it's great architecture, I'll accept it gladly. But these are huge projects. Brooklyn, places in Greenpoint, Long Island City. There are projects that are the biggest that I've seen. Right here, we've got Los Angeles has seen the biggest boom that they've had since the 1920s in building. Decorum, cussing, anything goes, period. What does that mean to the stock market? Self-righteousness. It also makes you insular. And that's one of the things that's going to happen, which will turn into a big negative. Just in the 1920s, we went very insular. America thought it could do it all by itself. And, you know, we do need others. We need partnerships. We're kind of doing the same thing here. The divisiveness, we'll see that.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So tomorrow night, the questions, I've got questions that we must answer. Number one, where are we now in the market? This is in the big picture, because I'm still a mega bull. That is looking for higher prices in 2019. What are the chances of a slide, a correction, or something more serious? Was this last blast, I'm talking about the last 3 weeks, this last blast a new kickoff phase? Is this key breakout coda phase unfolding now? What obstacles could stall this mega bull? Is it too late to hop on board, and how? So that to me is going to be very, very important. And to be able to answer the questions with charts. That's what I want to do. I've been preparing quite carefully. Now, a couple of questions that came in. Like, I don't know if this is pure coincidence, but from one person I got, I don't know if I'll find it right here. Let me just see it because I want to ask the question exactly the way it was phrased. Mortgage rates, and then it says, on the SPY chart, there is now a death cross. Can you explain when this happened last and what does it mean for the market today? And then someone completely different comes in here with golden cross on in SPX. So first of all, let me just say I don't ever use it. I know I've looked at the chart whenever it's been mentioned. I just don't do anything with that. I've got this as a leg D with a MACD just crossing positive, but not very strong. Stochastic okay at 71%, on balance volume rallying. It's a leg C. To me, it's most important that it's a leg C in the weekly, breaking out to a new recovery high with a gap up this week. I never expected it this week. I was expecting a pullback further. I expected the SPY to test the 273 level. It never did. And as a result, I don't know whether I've accelerated everything and the way to look at it, but I do know there are certain chart patterns that I am looking at that suggest that we're getting real close to some kind of an overbought level in the shorter term. And that's something completely separate to the longer term. So the question I also then had is there a 20% correction coming? I never said anything about a 20% correction. What I did say is that I think that within the context of what I'm looking at here, through this rotational aspect, you've had the transports act very well over the last few days. I think that that's really important. Most important, as far as I'm concerned, technically, is that the MACD and stochastic now on the weekly, because we've had these 3 days from Friday, Monday, Tuesday, we've had very strong action, whereas Thursday looked as if it was going to pull back. It never did. In fact, look, the S&P gapped up yesterday, and it's today having an inside bar. And that's saying to me that I've got to respect for the weekly to turn negative, you'd have to see a pullback from 285. Either it's time where it goes decisively over a 3-week period under 274, probably 273 to get the stochastic from 92% under 80%. And to get that MACD to turn around, it's either speed, something, Brexit or Nexit or Dexit or whatever it is, suddenly hits the tape. And the next thing you know, we're plunging 1,500 points down, just out of the, just bam, like that. And that would get the MACD and stochastic in the weekly to be very negative. So I don't know about death crosses. I do know that there is a potential for the deathly diamond right here to unfold. And that deathly diamond always creates a really positive, I don't know who calls it the diamond. A diamond, I don't remember what it was. It was 2 Ds, I know. So I just said maybe deathly diamond. But this diamond formation very often turns out to be positive because it retests the high. And that negates it. What used to be discussed, that I remember, is when people, whoever it was that spoke about this terrible diamond, deadly diamond, deathly, I don't know, it smashed to the downside. I just don't see that. And I don't know how it could happen without a lot of warning. And now the arch formation says, you know what, it's more like a V formation, and we've got to wait for Friday to see what happens by Friday. And I'm suspecting that by Friday, we do start to see a pullback in the Dow and the S&P and the Qs. But at this point, I don't see a 20% decline, not yet. So this is going to be something that I discuss tomorrow night in terms of what are we doing, what are we buying. We haven't yet started shorting stocks at all, but what looks like it could start to fail. And what's the implication of the TLT? The T-bonds made a peak D high at 126, I should have typed that in, 126, was it 80? 126.69 on the 28th. So let me put that in, 126.69 on 3, did I say 26? I think I did. And it couldn't be 26, it should have been 28th. 20, click, 8th, yeah, 28th. So this is not a top yet because the MACD hasn't crossed negative. Stochastic still at 84%. Price has gone under the 9 period, but not the 14 period. That's bonds. All I can say is if there is a sharp pullback and bonds actually start to climb into the 127.50s, yields will go much lower. And then we're going to see what happens to the dollar and a whole bunch of things that go together with it. Yes, a question, it was a statement about the, where is it? Meanwhile, Peaky in the Den says, meanwhile, New York coming up with a new tax every hour. How will that impact real estate, driving people out of the state? You know, when New York needs its people the most, people will be leaving for other reasons. As far as I can tell, there's a glut coming of real estate. When they talk about affordable housing here in Boston and everywhere, they're talking about affordable housing and how they're going to tax builders and everybody to try to build new homes. In another 5 years' time, there'll be more affordable housing than people could even get into. So I'm afraid, I mean, I don't want to be the bearer of bad news, but I don't think that real estate is going to last 5 years going like this. I think we're in for a really big dip in real estate. I say the Verrazano Narrows Bridge is now the nation's most expensive bridge to cross after an MTA toll hike ratcheting up to $20. Is that $20 each way? Went into effect Sunday. The one-way non-easy pass toll now tops $18 it takes to cross Virginia's Chesapeake Bay Bridge Tunnel, which is 23 miles long. The full Verrazano Bridge runs 2.5 miles. 2.5 miles. So that's a tenth. But no. The real issue is that the one is New York, a very congested area, New Jersey, New York, right? And the other is Chesapeake. So, my God, $19 without Easy Pass. I mean, you're going to Staten Island. It doesn't seem worth it. Jim Gloria Padron, who lives on the Brookline side of the bridge in Bay Ridge, it previously cost $17 to take the Verrazano from Brooklyn to Staten Island. Yeah. So, okay. Yeah, this is what's happening. And you see, it's one thing bumping up the prices. But if you look at least around here in the Northeast, if you look at city spending, that's never going down. In other words, they're not cutting programs, they're adding programs. So they're adding programs and then have you pay. It's like our mayor here, but the previous mayor said, oh yeah, we managed to do everything in our budget. Sure, but he overrode a 2.5, an override. So of course he could afford it. I mean, hey, I'll be back. Dow's down 104. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, we're back, and what I am going to talk about is sectors that have become very important to this particular phase of the market. For instance, the IYR, which led the market up from the December low as almost an independent unit, going to an all-time high, and actually is only in leg B in the monthly chart. I don't know how to call this. It's a B. This ends in a leg B in the weekly chart, and this is the US iShares Dow Jones REITs Index Trust. I like this chart. It's getting a little toppy. The MACD is just kind of flat right now, but flat says you can, in my work, it says you maintain the previous directional up arrow or down arrow. In this case, it's an up arrow. So I'm going to see how long that lasts with stochastics at 92%. Look at the on-balance volume. What on earth happened here? I've never seen this. All-time highs. On-balance volume is at all-time lows just about. I wouldn't say all-time lows, but certainly at lows. Oh, okay. If you put it into context, it's not too bad. But the low really was back in October of 2018. That's when it took off, and then it made another low, but the on-balance volume was much higher at that point when it made the low in December of 2018. And look at this. It's just a nice steady move to the upside. Getting a little toppy shorter term at 86.87. I'd say that it's probably around about 87s. Just maybe, I don't know if it'll even touch 88. I think right on the announcement, it's just due for a bit of a break. Let's see what happens here. But it really has been fantastic. So IYR, I just wanted to mention, as in this what I call compartmentalization. In other words, you've had rates drop decisively. It hasn't impacted the home builders, and I think I really say I should. It's not my area of expertise, but I'm just going to say my thinking here is that it has to do with other things besides rates. And really, it's affordability and other factors like that. And very nice move in the daily. Daily's gone basically from the I should have typed that in, 228, I think it was. Yep, 227.69, low in December, 227.69. And it screams all the way to the highs that it's making right now in the 298 area. And 3 days, it's been up in the 298s. It looks very good, but it has gotten a little overbought on the daily basis. The weekly chart technicals are still very good, and it's in leg D in the weekly chart. So this is going to be key, because in this particular phase in real estate, now I'm talking to, I believe it was, but it was Jane that asked me about it, and I said I'll get to it over a period of the next week or so. I think that selectively, I don't know what's going on in the Florida area. From what I read, I still think that there's some buying. I think it's more a case of rentals make a lot of sense for people, or even buying rentals makes sense. My suspicion is that the gains from the crash of 2008, 2009, and that was kind of the last time that I was down there, that is, real estate has kind of reached a plateau with certain sectors that are very desirable still having a bid, but the others are starting to, some of that buying pressure, I'm thinking, is probably going to be alleviated. And that's kind of what we're seeing here in the Northeast. Here in the Boston area, it's become much more selective. It's more buyers than a seller's market, complete opposite of what has been. But in certain cases, it can still be a seller's market. But I think that we're running out of energy there. So that's going to be important. If you look at the XLU, the reason why I'm showing this is the XLU made a high about 6 days ago. Now it's pulling back some. I put that down arrow yesterday. This is the S&P Utilities. It all ties in. And that's why I keep coming back to the dollar, because in a way, dollar is going to impact the world markets in different ways. It should be impacting the Johnson & Johnson's, but if the dollar ever starts to decline sharply, Johnson & Johnson just made a double top, 140 round number high, around about the 12th of March, 140 round number high, peak G, pulls back sharply, well, quite sharply, comes down to the 135 area, 135.74, has another rally and goes to a new, it goes to 140.29, a new recovery high. That started leg D. Look how many Ds we've got in the different sectors and different stocks in weekly charts that have been more mature, started the rally sequences with peaks in their weekly charts, whereas the Dow and the S&P have really had pullbacks. So this says to me that the Johnson & Johnson, let's say Procter & Gamble, oh, that's at an all-time high right now as we speak. Why is it not notated? There's only a leg B in the monthly chart. I just said compartmentalization. Look, within the same safe category of we call them, this is kind of both dividend and safety defensive, not defense, but defensive stocks. There you've got one at all-time highs, and the other one was starting to come up against resistance. This is really important. I think that this is just telling us this compartmentalization, that some companies have managed their profits very much better than others. I think that's what we're looking at here. I'm trying to think what it was we were looking at the other day. And I said, oh, that's right, the semiconductor index. I said, how come you got, say, an NVIDIA, look at this, NVIDIA, still way off its highs, all-time highs, and yet you've got a, this is a graphic processing workstations, basically in the chips sector, and then you've got MU, microcomputer comes out with earnings and says everything's just really good earnings, etc., and it spikes up to 44. The 44's all-time high was back at, was a 590% increase, but it went to 64, 66 back in May of last year, and it pulled back a little to 36. I mean, that's a whopper of a decline, right? And then it rallied sharply, and yet look at this. And I'm going to be talking about the discrepancy between the shipping, which says shipping is way down, they're laying off people in the semiconductor index, so the whole fundamental story is lousy. And look at the SMHs. I mean, this is outstanding action. Look, at 108.7 points, 6 points now, off its all-time high from a year ago, more than a year ago, March of last year, and now we're in April. I have to tell you that this is a very interesting story. Intel, I think, has been a big factor. Intel, let's see where that is. Yep, Intel's acting very well. It hasn't gone to leg D in the weekly. All-time high in Intel was in the 50, right there, 55, 57.60. Let me just type that in. 57.60, and it plunges, not like the others. It came down pretty sharply. It went to, from 57.60, went to 42.36. Yeah, percentage-wise, that's a big move, not as big as some of the others that went more than 50%, 36. And now it's up back at 54, 3 points away from its all-time high. So I think it's the selectivity that really counts here. And that to me is a big issue. So I wanted to show you that within context, sometimes we're looking at fundamentals not quite fitting with the whole story, but then you got to dig deeper, and then you find what's Advanced Micro Devices doing. It really got hit at one point. Let me just see AMD. As we go to our final break, AMD is up 4
certain
cents.
you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Yeah, a bunch of questions came in. Let me just deal with them really quickly. So is this rally like the rally of January of 2018? And then we came tumbling down, remember, end of January, beginning of February. I see it a little differently. And as I said before, I don't see a 20% correction right now, but I do see a good chance of a correction. And so that's the answer there. I think I need I need tomorrow to run. And I've got also to see how Friday closes. Why? Because of the particular templates that are patterns that I'm going to be showing tomorrow night that are going to be very important in terms of deciding whether the next low holds a trend line support, whether we're already done with that and we're actually on our way up. I believe we're getting to a somewhat overbought situation. That's what I'm looking at. There'll be another buying opportunity. A question I had about FXI. You see, FXI, which is the China, this is the big one. This is the China large cap ETF, has had a nice move off the low. And that low was way back in October, November of last year, just under 38. Then it retested an H pattern, turns into a cup formation. And we've gone to a peak D in the weekly chart. Monthly chart, you can see 54 round number high, to the 37s low. Now we're at 44. It's doing better. It's already made its low, I think. And that's going to be very important for negotiations. We'll see how this works out. So remember, my webinar tomorrow night is for subscribers. It's going to be looking at what we own, what we want to add to our positions, what we're looking at to buy that either we've missed or we're waiting. And then I might have a special session saying, look, I'm not going to use these as trades or anything. These are the stocks that are very good. I don't know how to actually implement a buy signal without having it on my list. I only have so much time. This is like a portfolio that we might have of some high tech, some low tech, some cyber stocks, and a whole bunch of stuff that normally you miss it, you've missed it because they take off and they're gone. And that's what I'm going to be looking at, besides what we want to buy at these levels right now on the pullbacks, because this is a very important phase, I believe. All right, I got to go, and I'll be back with Tom a little later today. Meantime, back at the ranch, you got Steve, you've got Dave, and you've got Tom O'Brien this afternoon, who I'll be with as well. So have a great day. Otherwise, I'll see you tomorrow. Check out my opening call.